Dear students and working accountants, welcome to my Expert Tallyprime YouTube channel. My name is Babu Rao. So in the last 2-3 months, that is from January, so I was not able to make videos due to some problems. So hereafter I am continuing to make the videos. And today in this video, we are going to take up the topic, interest calculation in Tallyprime 7.0. So interest calculation, we will learn about that. This is interest calculation is a vast subject. So in one video we cannot do. So I am making it in 3 parts. So this is the first part. So I am going to take up the first part, and then before entering the topic, a request to you, everyone entering into my channel and watching my videos, please don't forget to subscribe my channel, and next to the subscribe button you select all, that is next to it, you click the bell icon and select all. You'll get notification for all the videos which I upload in my channel. And another important thing is, so everyone watch every video till the end. Don't skip in the middle. If you skip in the middle, you will understand the topic up to that. The balanced topic you cannot understand. So it's a waste of time, nothing more than that. That is why watch till the end. Yeah, after watching fully, if the video is good, please like the video, and also you post your comment about the video, any doubts or anything about the video, so you want to tell, or the any doubts you have, you post in the comments so that I can answer you. So that is the only communication between you and me. Okay, right. And then one more thing is, if they watch the video fully, and if you required, you watch more times, so you will get a full knowledge. And also the problems which I show in the video, some problems I show in the notes, and some own problems you take, all these problems, if you practice or work out in Tallyprime many number of times, then you will get that practice makes a man. So if you more practice more and more, you will get expert knowledge. Okay, now, so we'll enter into the topic. So our topic is today interest calculation. So we learn about the interest calculation. This is done in 3 parts. So that's I will explain you what is that. So I am sharing the screen. You see. So this is about the interest calculation. Interest calculation. Okay, this is about interest calculation. Generally, what is interest? So generally, there is interest is paid by debtor to the creditor. That is, so by for purchase and sale of goods, so the debtors will pay interest to the creditors, and not only for purchase and sale of goods, debtors, but also on the loans, loan from banks, loan from other financial institutions, loans from friends or relatives, are giving loans. We give the loans. Our business is a finance business. We give loans to the public, or also we will give loans, or we will give loan to our friends or relatives. In all these cases, how the interest is calculated for the debtors and creditors, and also for the loans, how that everyone will take, but only I am taking up only debtors and creditors, because for a business, main thing is debtors, creditors, and if you know this calculation, you can understand. For loans also you can understand. Okay, now, so in this case, the interest is of 2 types. One is simple interest, and another one is compound interest. So the interest, whatever it may be, if you sell the goods, the customers, they are called debtors. From them, if you calculate the interest and we receive the interest from them, it is called interest received from the debtors. We receive the interest because we are selling the goods. On that amount, we receive the interest. So from the debtors, we get interest. It is called interest received. It is indirect income. And for the creditors, when you purchase the goods, for that we make the payment to them. Because all this, when the payment or receipt, the amount is delayed. If the debtor paying to the creditor, that is the buyer paying to the seller, is delayed, for the delay period only, the interest will be calculated. So for the creditors, we will pay the interest because we are purchasing goods. So it is called interest paid. It is on group is indirect expenses. Okay. And in this case, simple interest and compound interest. What is meant by simple interest means that amount is interest is calculated at a particular percentage for a whole period. That is from the date of the transaction till the amount is paid. So when the amount is going to be paid by the debtor, that is in the case of debtors, when the debtor is going to pay to us, In the case of creditors, when the amount is going to, we are going to pay to the creditor till the date. So on the total period, the interest is calculated on the simple and on the same principle. On the same principle, for example, 25,000. So for 4 months, we will pay after that. So for the whole 4 months, we calculate the interest at the same rate of, suppose per month 2%. So 2% for all the 4 months, we calculate at a time total interest. That is called as the simple interest. So only on the same principle for the whole period, we calculate at once when they're, and after that, so we will get the money. I mean, in the case of debtors, they will pay the money along with the principal plus interest they will pay to us. In the case of Sunday creditors, we will calculate the interest. We will pay them the total amount of principal plus the interest. We will make the payment. So that is called the simple interest. Okay. For example, see, in the case of a debtor, the principal amount is 25 days. That is sold on so and so date. Okay. From that, after 4 months, he is going to pay. He will ask us, so I am going to pay. So tell me what is the total amount payable, principal plus interest. So for the 4 months, for example, we calculate the interest. For example, if the interest is 1,500 rupees for all the 4 months at the same rate on the same principle, we calculate. So 1,500 rupees, the interest is, for example. So the total amount will be 25 plus 1,500. 26,500 rupees is due from the person. So when you calculate the interest, we make the entry because in his account, only 25,000 rupees will be shown as a debit balance in the debtor account. In the case of creditor, it will show as a credit balance. Okay. So only the balance will be shown. So this tally, what you are going to do is, it is only a calculator. It will calculate the amount and it will show the amount of interest. That's all. So entry will not be made. That is, for the interest, it is the books of accounts are not affected. Only it will show the calculation, just like a calculator. Instead of using manual calculator, we use the Tallyprime. It will calculate exactly without any error. So after calculating that, the 1,500 rupees, first of all, his amount due is only 25. So this is also due now. So after calculating, we have to pass an interest. That is, interest you are paying, received means it is income from debtor we have to receive. So debtor account will be debited. This is to be first. Debtor account is to be debited because he is due. This amount is due already. This is also due from him. So debtor account will be debited. Interest received income account will be credited. Debit, debtor account, interest account, interest received account will be credited. In the case of creditor, we will pay the interest. So it is an expense to us. So it is payable to the creditor. So his creditor for that amount also we have to pay. So interest paid will be expense. So interest paid account will be debited. We have to pay to the creditor. Creditor will become more, balance will become more. So creditor account is debited. Just opposite. Debtor account debited, interest received is credited, interest paid is debited, creditor account is credited. This is the entry we have to pass when the interest is calculated. That is after the total period when he is going to pay. For example, in the case of creditor, 25,000. So this is not this. This is the compound interest. Okay. In the case of simple interest, this is the method. And what is compound interest? In the compound interest means, so that is, interest is not calculated for a total period on the same principle. That is interest on interest. That is, we fix a period. For compounding means adding to the, and compounding means adding interest to the principal. In such a case, we will not calculate the total period interest at the same price, same rate, and on the same principle, we will not calculate till the end. What we do is, so we will fix up in advance what is the amount of compounding. Compounding means adding interest to the principal is called compounding. So what is the period? It may be month. So every month compounding, or it may be a quarter compounding every quarter. It may be half an hour, half year. In such a case, every half year we calculate. That is the at the end of the compounding period, at the end of a month, at the end of a quarter, at the end of an half an hour, or if it is yearly compounding, at the end of the year. What we do is, we will calculate the interest. Calculation of interest is same. So calculation of interest will show. Okay. So that will be calculated at the end of the compounding period. For example, we will take the example monthly. Monthly we will take. And monthly if you take, so here is the interest is transferred. Similarly here, we will take the compounding monthly. So compounding monthly means we calculate the interest at the end of the month. So when you calculate the interest, it is to be transferred to the party account because the party has to pay the principal plus interest. That is why every time we calculate the interest, that simple interest at the end of the month, compound interest at the end of every compounding period. So when you calculate the interest, this will calculate and it will show the calculation only, the tally. It will not make any entries. We have to make the entry. So similarly here, at the end of the compounding period, for example, month, at the end of every month, we have to calculate the interest. In such case, what we do is, at the end of every month, we calculate the interest, and since when the interest is calculated, transferred to the party. So it is to be transferred to the party account. So then what will happen? Already principal is there. This interest is transferred. So the total amount, including principal and interest, total will become principal for the next period. Means for the next month, the total amount will become the principal. And next month, for the total amount we calculate the interest, the same rate. We can change the rate also, that is different. So at the same rate, at the end of next month, for that 1 month, the amount interest will be calculated on the total principal. Total amount means last month principal plus interest, the total amount. And the total amount, next month calculation will be done. So okay, and again at the end of next month means next period, that will be transferred. So total previous first principal interest is added, then that is the principal. So to that principal, this interest again is the next period, interest is also added. So for the next period, the total amount will become the principal. Like that, every month the interest calculated will be transferred, that will be added to the principal. So if it is added to the principal, the total amount will become principal again for next month. So next period, on this principal, interest will be calculated. Like that, whenever he pays, so till that we may pay at the end of the month or in the middle, whenever maybe. So when he pays, so every period will be going on compounding. At the end, when he is paying for that period, at the end of the period, that when he is paying in that period, up to that date, we calculate the interest and transfer that, and the total amount transferred will be paid by us. So in the case of debtor, they will pay to us. In the case of creditor, we will pay to them. So simple interest and compound interest. But the compound interest example, this is simple interest. In the case of this one, 1,425, that is 25,000. So for that, for example, the period may be monthly. Monthly means at the end of April. If it is quarterly means April, May, June, at the end of June. So quarter means at the end of June, at the end of the quarter. Month means at the end of the month. What we do, interest is calculated at the end of the month or at the end of the quarter. Take it month only. At the end of the month, we are calculating interest 500. So after calculating at the end of the month, that will be transferred. This is transferred only at the end when it is calculated. That is when he is paying for the whole period we are calculating. But here for the compounding period we are calculating. So 25,000, we calculate interest 500. So that is transferred to the party. Then the principal total amount will be 25,500. That will be the principal for the next period. Means next month. This is the what you call. This is the principal. So next month at the same rate, the interest will be calculated for next month on this principal. That is last period principal plus interest will be the principal for this period. So on that we calculate. For example, it is 550. So this will be added again, transferred. Then 25,500 plus 550 will be 26,050 rupees. It will be the principal for the next period, means next month or next quarter. And on that we calculate. So it is, for example, if it is 620. So in the case of 620 is calculated in the first one, second period, first month, second month, third month, or first quarter, second quarter, third quarter. So in this case 620. So it will be added again, transferred to the party. Then the amount due will be 26,670 April, May, June. So at the end of June, if it is quarter, April to June, this is April to June, then June to July to August, September, July to September, then October to December it will be, if it is quarterly. Okay. So at the end of, if it is monthly, at the end of 30th June, this is the amount, and because everything is transferred and compounded, 26,670 rupees will be due. So every month when you are transferring to the party, we have to pass the entry. Here we are transferring at one time. So transferring the entry for debtor for creditor. That is, debtor means interest received, for creditor and interest paid. In the same case, the same interest same entry we have to pass every period, every compounding period. At the end of the compound, when the interest is calculated, this entry is to be passed. So that is the thing we have to do. So simple interest at the time of payment, for compounding interest at the end of every compounding period we have to calculate, but simply calculation it will show that is not enough. That is amount that is due from the person debtor to the creditor. It is to be transferred to him. Otherwise, how he will pay? The only principal will be shown in his account. So every month, every time we have to transfer. Any interest is calculated, it is to be transferred. So at the time of calculation or payment means at the end of the period, that transfer to party account. That is interest transfer to interest, transfer to party account. Interest transfer to party account, and then this how to transfer that, how to transfer. So there are two methods to transfer. One is journal, like that. This is transferring. So in the case of debtor, interest issue, debit, debtor account debit, interest account credit, we have to make manual entry in journal. We have to make the manual entry in journal. In the case of interest paid for creditors, interest paid account debit, creditor account is created on the day of calculation, that is at the end of the month or at the end of the quarter. These entries are to be passed for this one. Entries are to be passed through entries passed in any case, either simple or compound. So entries will be passed. Maybe it may be passed through journal. So in the case of journal, we have to pass the entry manually. So interest account is debited, for example. Interest paid account is debited. An amount, we have to see that calculation. We have to enter the amount manually. And the creditor account is created automatically. In the case of interest received, so debtor account is to be debited with the amount of the interest. Manually, we have to enter the amount of interest. Say here it is 500, 1,500. Here, in the case of this one, 550, 500, 550, 620, like that. We have to make the entry through journal. The interest amount is to be entered manually. But instead of that, we can do another. We can use credit or debit note. That is, in the case of creditor, we have to pay. That is why we issue credit note. Say your account is credited. His account is to be credited, isn't it? Creditor account is to be credited. So for crediting that, we issue the credit note. So credit note means his account. In the credit note, we show this. Just like journal, in the credit note itself, we show creditor account is to be credited, interest paid account will be debited. Okay. So in the case of debit note, that is in the case of debtor, we have to receive the interest. So for that, debtor account is to be debited, interest account is credited. Because his account is debited, that's why we issue debit note. But what is the difference between this and two? Make same entry, we will be passed. But in the case of journal, we have to enter the interest manually. In the case of credit or debit note, that amount is calculated, that amount will be taken, it will take the amount automatically. So when you are entering in the journal, we may enter mistake, we may commit mistake. But in the case of credit or debit note, everything else is, you will take the amount of interest automatically, it will take that. For that we have make settings. Okay, so this is the okay. And then for all these calculations, so we have to make settings. Without settings, the Cali will not work anything. We have to give the setting, then only how to work. So first of all, what is the work done? What is the work done? To be done, interest calculation. So work to be done. What is the work to be done? For that feature is required. So in the F11 features, that interest calculation feature is to be enabled. How it is calculated? So F12 in configuration, we have to activate the method of working. That is how it is to be calculated. That setting is called. That setting is here. Feature is enabled. That's all over. But setting is into F12 in the configuration. We have to enable. Activate the configuration means setting we have to activate. So for activating, there is two types of settings. One is simple setting, that is simple configuration. Another is advanced configuration. So in some cases, so simple configuration okay, but in some cases we have to take advanced configuration. So first of all, we take up the interest calculation, simple or compound. Maybe first we take the simple interest for debtors and creditors. Then we will take the compound interest, debtors and creditors with only simple configuration. So everything is same. Advanced configuration, there will be some more options will be enabled. So some more options will be enabled for this. Okay, like that. So now we will go to Tally. So if you go to Tally, in this case, see one company is created. See here, sorry, interest calculation is created. How will calculate? You know how to calculate the interest. See, go to this one, see alter. So this is calculated. This is not required now. So that is over. So this is deleted. Okay. So here we will calculate, we will create the company. Same, we know creation of company. And after creation of company, if it newly created, directly we will go to after creation, company is created successfully, and we go to features. We'll go to features. This is already created, means now we have to go to the features by pressing F11. So in this F11, if it is previously, it will be no, only accounting features, 2 features, inventory, 2 features, taxation, 2 features, like that, 3 features or something like that it used to show. But now it is removed, and everything automatically, even if you create a company, all the features will be shown. So it will, otherwise in the previously it will be no. See, it will be no. So here only 2, 2, 3 will be shown. So what you have to do, show more features, we have to make yes. And this also, and then this will be no. See here, this will be no, few features, and this will be also no, only for few features are there. So more features, make it yes. Make it yes. Some more features you will get. And make all features, make it yes. You will get all the features. This is the list for any company. This is the list, and whatever feature is enabled or disabled, limited to this company only. Okay. Now here, maintain accounts, bill wise entry compulsory, because it will calculate the interest bill wise. Bill wise, I told you everywhere bill wise entry is compulsory. Bill wise entry, and then here after that, generally what we do, these are created, and if it is inventory, so inventory will activate inventory, maintain inventory, then integrate accounts with inventory, and there is in GST. So we will enable the GST and give the GST details also. This is what we do. But now what we require in addition to this, now we require interest calculation. So in this accounting, see, after this, give the next one. So next one, leave the next one. That is another one. See here, enable interest calculation. Enable interest calculation. Enable interest calculation. Make it yes. If you make it yes and accept, means now interest will be calculated on the debtors and creditors, and all other personal banks also it will show. But now we are taking up debtors and creditors. Now we have to create the ledgers. So ordinary and all the ledgers creation, everything is the same. But in the case of debtors and ledger, so since the interest calculation is enabled, so there also we have to enable the interest calculation, and we have to give the settings. So simple settings, simple configuration, advanced configuration, that we will take up, simple configuration will take up. So here, enter. So we create the all the ledgers, purchase, sales, tax details, bank, everything same, no problem. So here you see, here cash by default, CGST, we are creating, let's say IGST, then HGST, then purchase account, then sales account. If there are written purchase and sales also, that will be, see, the amount, the sales returns are there. So sales account, when you sell the goods, the balance will be reduced. So till they are returning the goods, they have to calculate interest for that also. So that's where if there are returns, we have to take that also. Okay. Now, in addition to this, we create the party. So here I am creating a debtor account. So I already created. So this is Andhra Chemicals account. So I am giving in brackets D to remember, because if you see the name, you cannot understand debtor or creditor unless you show this page. Okay. So it will come under sundry debtors, and here, so this is bill wise details, and here generally we give the period. Here we can give, if you give the period here, and then in the dispatch details and all this in the next window, party details, the next window in dispatch or receipt details, no, below that order details. In the order details also, mode or term. Mode means cash or bank. Term of payment, how many days payment. So the term of payment, the same 30 days will be shown there. So if you give it here, so and after that, the same days will be taken when the bill is accepted, invoice, then in the bill wise details, new reference, number, and then the days will be shown. Okay, but here you can, without giving this here, so without giving the days here, directly in the bill wise details also we can give. Okay, so I am not giving here, and here come down T. Allow, activate interest calculation. Activate interest, that is activate interest calculation. Make it yes. If we make it yes, so how to calculate? So here calculate interest is enabled. We are making now. And how to calculate the configuration called as parameters. Parameters means setting. It will show another example, another window. Interest parameters. Interest parameters. We are taking only simple parameters. If you want to advanced parameters, advanced settings, if you take L12 configuration, use advanced interest parameters. It is no, we can keep it there. If you make it yes, some advanced setting will come. Now so first one is, see here, calculate interest by interest transaction by transaction. For every transaction, suppose from today we started first bill, and then we are calculating interest at one certain point of time. Simple interest at one per certain point of time. So for the first bill, from that date to that point, end point, and another bill after some time, from that date to that point, like that. Bill by bill, every bill separately it will calculate. First bill from here, from this date to the end date, and second bill from that date to the end date. One more bill from that date to the end date. That is, for every bill, bill by bill separately, the interest will be calculated. Okay, that you give yes. And now override parameters during voucher entry. When you are making the entry, so one entry is made, sale or purchase. So this is that will take this one. And it will ask you, you want to change the parameters, the last line. This is the actual calculation. This is what to do, and this is the actual calculation. In that case, so do you want to change the parameters, either rate or period, whatever it may be? If you want, generally rate may be changed. So you want to change, it will ask you. If you enter, so the same will go up, the same will continue. Otherwise, if you want to change, you can change. So like that. So if it is there, if you give no, so it will not ask you anything. Do you want to change? If you give yes, for every entry it will ask you the same parameters will be shown. I will show you that one. First of all, I will show you. Later I will show you. No. And then here, include transaction date, the date of the transaction for interest calculation. That means when you are making the entry, how the interest is calculated. Generally, interest is calculated. So from today is the bill date, invoice date. So from today to next day is one day, isn't it? Today evening we purchased or sold. So for the same day, it will not become one day. So for the next day, it will be one day. You purchased on 1st April or sold on 1st April. So second day will be the one day. To the second day, 2nd April will be one day. So to start calculating after one day, that is second onwards it will calculate. Second one day, third 2 days. So first day is one day, first date is not calculated. That is why the next day it will start. That means the transaction date is not added, is not taken into account. From next day only it is taking. If you start from next day, the date of the payment ending, so that date also up to that date. From this date, the next day to that date. That is the calculation. So for example, second, if you take 2nd April, 1st May will be 1 month. And that's all. So it will start from 2nd May, 2nd April, for up to 1st May will be 1 month. So the date to the previous date in the next month. So from 2nd it will start. So ending will be the next month or April, May or anything, May, June, 2nd June, 2nd July, like that. So 1st July. So from 2nd to 1st, suppose in the middle, 15th is the date. So next month 14th will be 15th to next month 14th will be the due date. That is the period of 1 month. That means from this date, it is not the transaction date is 1 is not added. It is not added. There, the payment date is added. Here it will not add. There it will be added. So first is the so here 2nd to 1st. So that is the period. Otherwise, if you want to take the Add to the first day also if you want to add. In the ending, it will calculate to the previous date. So first to April 1st to, it will not be May 1st. May 1st to previous day to May 1st. That is April date. First to 30. Second to next month first. Fifth to next month fourth. That is the period. This is here. Do you want to add in the beginning? If you make yes, both yes, it will add in the beginning. In the ending, it will remove one day. It will be calculate for the previous day. If you make it no, it will not add here. It will not remove there. So from second, first is not added. From second, their first is not removed. It is adding. That is why this is a thing. Generally, this method is the good one. Make it no. Okay. And then come down. Here, what is the rate of interest? What is the rate of interest? For example, 2%. For example, 2% or whatever it may be. So for the what is the calculation period? 2% per month or for year. Here, 30 days month means it will take only 30 days for any month, whatever the number of days. Suppose there are 30 days, it will take 30 days. 30 days month means it will take 30 days. If there are 31 days, it will take only 30 days. One day it will remove. So that will be added to the next period. So next month, this one also will be added there. So next month is 31st. It will be added. It will become 32. So next month also only 30 days will be taken. 2 months will be taken to the next month. That is the method of 30 days month. And 365 days year means if you give 365 days year, so it will take only 365 days for 1 year. Suppose in the case of leap year, it will be 365 days it will take. So one day extra, 366 days. One day will not be taken. That will go to it will be added to the next year. In the case of 30 days month, in the case of February, only 28 days. So 30 days month it will take. So in the next month, it will take 2 days also. So 30 days it will be like that. And then calendar month means calendar month means here calendar month. Calendar month means it will take a month. That is from this date to the previous day in the next month will be 1 month. Whether in this month to next month, in this month there are 30 days or 31 days. April 2nd to May 1st. See in the April only 30 days. May 5th. May 5th to June 4th. May 5th to June 4th will be 1 month. But in the case of May, 31 days. Whether 31 days or 30 days in the case of February. February 10th to March 9th. So in February, there are only 28 days. It is not bothered. Whatever the number of days from this date in this month, the previous day in the next month will be 1 month called calendar month. That is the best method. And the calendar year means calendar year. Calendar year means also calendar year means this is calendar. This next one is calendar year. So calendar year means for 365 days it will take as year. 366 days also it will take as year. It will not take more or less. So but generally that is so. Calendar period, month or year is better to take because in the case of 30 days, 365 days, the excess days, less days will be adjusted in the next month. So we will take up calendar month. So 2% per calendar month. If it is, for example, 24 per month, 2 months means per year it will be 24 months. If it is 24%, then we will take it as calendar year. So the percent can be given as per month, or per year. 24% per annum or 2% per month, whatever it may be. So I am taking 2% per month and calendar month you are taking calendar month. So not without bothering, but if the amount is paid not in the exactly, if you take some days before after in the middle of the month, then for that month days will be taken because the full day month is not used. So previous months full month will be taken as a month. But at the end of it, then not month is completed, still there are some days lesser or more. So for that days also, it will lesser means it will reduce the interest. More days, 2-3 days more, then it will increase for that days it will calculate. How it will calculate? For that month, it will calculate the per month interest. What is the interest per month divided by the number of days in this month, 30 days or 31 days or 28 days. So you'll get per 1 day interest. So that will be multiplied with 2 days, 3 days. Like in the example, we'll get. Okay, this is done. And then this is called as what you call interest balances. And what balance you have to calculate? Odd balances means we are selling to the person, Purchasing from the person, same person. In such case, for sales you have to calculate, for purchase you have to calculate, debtor, creditor, like that. That's why all balance if you take, it will calculate all the balances. And in the case of sales, so person debtor, that is the customer will be a debtor. So his account will have to show debit balance. So we have to calculate on the debit balance only, or we have to calculate on the, in the case of creditors, we have to calculate on the credit balance only. But here, what is taken by us? Here is a debtor. That is why we will take up in the debit balance only. So okay, in the debit balance only. So other thing, Vijayawada, suppose he is from other state, Vijayawada, Telangana, Andhra Pradesh. Okay, this and all the details, regular number is given. So okay, this is for debtor I created already, but we can create it during the voucher entry also. This is creditor for sales, where purchasing. So here, creditor, here also, I have 30 days here. So in the first case, I did not give, here it is taken. So that will be given in the bill wise details. Here, automatically this will take. Okay, now here, come down, and here it will be okay. Yes, yes. So here, same thing, yes, no, no overriding, and no. And here we are taking 1.5% per calendar month. So here we are purchasing is a creditor. So we will take credit balance only. All that is Tamil Nadu, the same Telangana. So CGST, HGST. And GST, CGST we created. Okay, this is the thing. So for one debtor, we give, for debtor, the number of days are not given. That is, credit period is not given. For creditor, credit period is given. If you give the credit period, it will show in the, that is in the case of dispatch or receipt details of goods, for that order details. In the order details, the same number of days will be shown. Okay. And without giving here, we can give in the order details also, we can give, or instead of that, we can give in the bill wise entries also. Whatever you give, it will go to the bill wise details. That is in the bill wise details. Okay. Now we are taking, for example, voucher we are making. So I purchase, sales, everything. First we are making purchases. So date is 1st April we are taking. 1st April we are taking, and we are taking first purchases. So sales, not sales, we take purchases. So for purchases, there will be, definitely you have to enter, not, this is not the invoice number. So supplier invoice number 256, for example. And here we are purchasing from the creditor. So is the creditor, and here see 30 days given for the creditor. So it is showing term of payment 30 days. And here if you want to change, you cannot change. So if you remove that, so again it is taking that. If you 25 days, so it is taking. So we cannot remove that. So 30 days are there. 30 days are taken, accept. And here it is taken. Okay, then we are purchasing goods, and I created stock items also I created. We know how to create. So I, for example, item A. So item A, so group I did not give, numbers. So that is the quantity I gave, units UQC, quantity code, numbers, tax is applicable, specified details here, 1, 2, 3, 4, 5, 6 I give, and specified details here, it is taxable, 18% I give. Okay, it's okay. This is purchase. And here we are purchasing 5 numbers, each one is 2,500 rupees, 12,500. Second one, if there is only one item, then we'll go to the tax. But here there is one more item also there. If not there, one item we will take up. This is also 5 numbers, each 3,000 rupees. So 27,500 rupees. Then there is no other item. Next, come down. So the same state, CGST, HGST, CGST, HGST, and come down here. Come down. Now it is taking, this number will be taken, invoice number, new reference 256. The same 30 days is given here. 30 days. So in this case, 30 days given here. So instead of remove, we can remove there and we can enter here. If it is not given, if it is not given, directly we can give it. That will take in the next one. So okay, 30 days and due date is showing. Okay, right. Accept. Okay, over. This is purchasing. Now we will take up sales. Sales we are taking. Sales I am taking 2nd April. I am taking sales. 2nd April I am taking. So the method of calculation, we're getting the interest will be a little different. I will show you. Now we are selling the goods. We will sell to the debtor. But here for the debtor, we did not give the number of days. Credit period is not given. That is why here no credit period, no term of payment, accept party details. Okay, sales account, and now we are selling again. So 5 we have. So item A, two numbers. So what is the amount we are paying? We have to charge. We don't know. So there are many items. We don't know what is the rate, but one or two items we can remember. So go to Alt S. We will go to the stock query. We purchase for 2,500. Okay, we are selling for 3,500. Okay, 7,000. Next item B. Item B also we are selling two numbers. So what is the rate? So Alt C, it is 3,000 rupees. We are selling for 3,500 rupees. What is the amount is 14,000. Yeah, 14,000. Okay, 14,000. Whatever it may be. Then it's here. When you are making the entry, you have to see. So when you are making the entry, accept the party details. So supply selling means, so here the place of supply. When you are selling, his place is the place of supply. When you are buying, our place is the place of supply. So depending on the this one, and both are same. Both are same means both, that is our state and the state is same. Then CGST. The states are different. Then it will be a GST. So here you see place of supply, and our place is Andhra Pradesh. The place of supply is Andhra Pradesh. Ours is Telangana. Place of supply is Andhra Pradesh. Both are different. Even purchasing, if it is, for example, our purchasing, our place will be the place of supply. In such a case, place of supply, our place is place of supply. His place is also place of supply, for example. Then CGST, accept. Then sales, we are making sales. Here we did not give the dates. And here, from here, it is interstate. So IT, ST we have to charge. Come down 16,620. 1 minute. I will make some example. In Telugu video, this amount is somewhat increased. I will check up. Pass. So I will change the rate. 7,000. It is 10,000. I will make it. So we will make it one number, and this also we make it one number. So it will be 8,450. 8,250. That is this is, for example, 3,550. We make it. Then 8,019. No, the 3,525. 8,450. 3,550. 3,019. But okay, whatever it may be, 3,500 we will take up, no problem. 3,500 rupees. And then here, when I'm making this, entering new reference. So in the case of sales, our invoice number, sales voucher number itself is the invoice number. And then come here. So the date, nothing is given here. So for example, we are giving 30 days here. We are giving 30 days. 2nd May will be the last date. Here, see, when you are giving here, there we have to give dates only. There we cannot give date. We have to give number of days in the bill-wise details. Enable bill-wise details, you have to give default credit period, number of days only. But if that will come automatically to the term of payment. But in this case, if you give the credit period in the bill-wise details, here we can give due date or credit period. Credit days, 30 days, credit days we can give. So if we give this, it will show the due date. So same thing, instead of that, we can give the due date also. If you give the due date, it will show the number of days. But here, days you can give any days. But in the case of due date, if you want to give, we can give only 1, 2, 31. Other dates it will not take. So for example, here, if it is 2nd May. 2nd May if you give, so number of days 30. If you give 30, it is showing, if you give 30 days, it is showing 2nd May. For example, if it is, we are making not 2nd May, if you give due date, different due date, suppose 3rd May, it will not take. It will not take. So in this case, if you know the due date you can give, so it will show the dates. But we are giving 30 days. So it will give 2nd May we can give, or 30 days you can give. Other dates you cannot give. 1st, 2nd, 31st. Okay. This is okay. And here you see whether giving in the case of we are making calculation, simple configuration. In the case of simple configuration, the number of days given will not be taken because interest will be calculated after the due date. If you give the grace period, that is days of credit days, if we give, the due date will be after completing the credit dates. That means interest is to be calculated from that date, and from the due date only interest is to be calculated. But in the simple configuration, it will be calculated from the beginning itself. The number of days credit will not be taken into account. If there are credit days, then you have to go for, I mean, compo. Sorry, what you call that configuration, special configuration, that is called. For that configuration, simple configuration and other configuration, advanced configuration, we have to go. So I will show you here how. Okay, over. So in this case, two entries are made. Now, what are the entries we made? See, we made one is purchase, one is sale. So for example, for purchases, you will take up. For purchases, you will take up. Here, there will be a little difference. You'll get some doubt. So purchases, for these two people, what is the simple interest means? Calculate at the end of a period, and the same principle. So here, how do you calculate that? You will only a calculator. Okay. So come down to display more reports. Then you come down to, so account books means you'll go to ledger and all these things. So this is statement of accounts, D, yes. So display more reports means D, yes means statement of accounts. So decimal. So after that, it will show statement of accounts, outstanding, statistics, quit. Statistics means how many vouchers are entered. What are the vouchers we entered, and what are the total number of vouchers? Groups 28, ledgers 9 now we have, and groups and all these things. Voucher types 24, and other things we created. Like that, it is the number of vouchers. It is how many vouchers we used. That is the statistics. And outstanding means, if you click outstanding means amount due. So receivables, payable. Payables means sundry creditors, we have to pay. Receivables were received. It is sundry debtors. If you go to ledgers, all the list will be shown, all the debtors and creditors. If you take debtor, creditor, all the list will be shown. If you go to group, it will ask you want debtors or creditors. If you want creditors, creditors list will be shown. If you have debtors, only debtors list will be shown. But if you go to payables, the same thing, debtors and creditors, instead of going that, here if you say payables means creditors will be shown, debtors will be shown in the case of this one. And now here, in between, there is one interest calculation. It will not be there. Since in the F11 features, we enable interest calculation. So since we enable that, then it is showing that you have to click that now. You have to click that. So after clicking that, now interest is to be calculated on what? On debtors or creditors. For example, we are taking for creditors. That is the first entry. Creditors we are taking. Creditors means interest you have to pay. That is called interest payable. Interest payable means all the creditors for whom we enable the interest calculation, their interest as per their individual, all the first X, all the bills interest calculation, and then next person. All the persons will be shown. In the case of receivables, all the debtors bill-wise calculations will be shown. If you come here, ledger, all the ledger accounts, debtors, creditors will be shown. So whatever you want, our individual person, we can select and we can see the ledger. We can see the interest. Group means you want debtors or creditors. So if you want debtor, sundry creditors, if you click, that creditors list will be shown. Then we have to select. We can select that, and the debtors and debtors list will be shown. So it will be calculated. Okay. So this ledger, but we got this here, all the ledgers. For individual one ledger we want to see, you go here, select the person. Okay. So now for creditors, we have to pay interest. So go to the interest payable. It is showing actually, it will show for 1 day only actually. It is not working properly. Mouse is okay. So 1st April to 2nd April, because from next day 1 day, for 1 day it is showing, but what we have to do is we have to go to the total period. You see, if you click, sometimes for the period we have to click Alt F2. Sometimes you can click only F2 will work for period. So 1/4 it is taking. So 1/4 25. Even the transaction is in June. If you give from 1/4, so from 1/4 to June, there is no calculation. No calculation will be made. It will start calculation from June only. Okay. And here and up to when he is want to pay, when you want to pay. The creditor, when you want to pay. For example, 1/7. 1/7. So if that is 1/7, you are making payment. So enter. So this is the interest, and here this is the total interest for all the creditors. But as current liabilities, what are the liabilities? Sundry creditors, loans, everything will be shown. Now it is showing only sundry creditors. Who are the creditors? If you click, only one creditor is there. List will be shown, or each one calculation will be shown. This is all total calculation. Actually, then enter that. It will show the bill wise. So that data, the creditor, what are the different bills? It will show all the bills. So this is the bill number, amount. This is the opening balance. This is pending amount. That is nothing is paid. So opening amount is there. So it will calculate interest for the total amount. Okay. And the interest amount is shown from 1st April to 1st July. 1st June or 1st July. We have taken 1st July. So here, how it is calculated. So here, if you enter in below that, it will show the calculation. Again, if you enter, it will close. But here, there is only one bill. So we can click enter. If there are 5 bills, so we have to click. For each bill, you have to click. Otherwise, simply Alt F1 or Alt F5. Click, all the bills will show the calculations. So here we click either enter or Alt F1, F5. So the details. See here, what is the amount? 32,450. 32,450. And how it is calculated? From 1st to 2nd, from 1st April we give. From 1st April, it will calculate from 2nd next day. 2nd April to 1st July, it is calculating. 2nd April to 1st July. That is from this date to the previous day in any month. So April, then May, June, July. July, 1st April. Exactly how many days? Not bother about the days. 1 day, 30 days, 31 days. So exactly 3 months. Exactly 3 months it is calculating. Okay. And here. So 2nd April to 1st July. And another bill. It will show another bill. Another bill. Like that. For this person, all the bill will be shown. If you calculate, so if there are more persons, go to the next person. For the next person also it will show. So Alt F1. How it is calculating, you see? Here, what is the amount is? Total amount 32,450 into what is the percentage you give? 1.5%. Oh. Not for this, for creditor. Okay, parle. No problem. So 1.45% into 1.5. Sorry, 1.5% is calculated. This is per month. Okay, this is per month. And how many months it is there? How many months means it is 3 months exactly. From 2nd April, 1st April to 1st July means 1 day extra. 2nd April to the previous day in any month. That is 2nd April to 1st May, previous day. 1st May, 1st June, 1st July, like that. So 1st July, say exactly 3 months. That is April, May, June 31st. So 1st July means up to June 30. 3 months. Into 3 months if you take. So what is the amount? 1,460.25. See, what is the amount? 1,460.25. If it is paid, not on 1st July, paid on 2nd July. Paid on 2nd July means, so 2nd April to 1st July will be 1 month. It will be April, May, June. So 3 months. Is the 1st July you are paying, the 1st July it is taking. April to June. April to July 1st. If it is paid up to 1st July, April 2nd to 1st July, exactly 3 months. If it is paid on 2nd, so 1 month, 1 day extra. So in that case, it will not take month. For that 1 day, for the July month, there are 31 days. So the monthly interest is divided by 31 days into how many days extra? 1 day. Into 1 day, that amount also will be added. We'll show in the next month. Okay. We'll show in the next example. So exactly the interest is calculated exactly. Understand how it is calculated? So 34,250 into 1.5%. 1.5%. This is monthly into exact 3 months. April, May, June 30. So up to the June 30 means April, July 1 also. So April 2nd to April, May, June. So July 1st it will take. So the next, 2nd, the previous day on the last month. So 1st April to 2nd April, 1st April means it is taking from 2nd April, 2nd April to 1st of any month. So 1st of July, it will be a month, 3 months into 3 months. To calculate 330, 2,450 into 1.5% into 3 months, April, May, June. Into 3 months, 1,460.25. So it is exactly calculated. So if you take, for example, 1st April to 1st August, if it will be 4 months. If it is 4 months, what is the interest calculation? So 34,250 into, 34,000, 32,450, 32,450 into 1.5% into, so from 2nd April to 1st, 2nd April to 1st to August. So 2nd April to 1st August means April, May, June, July. So the 30th August 1st April, anything from 2nd to 1st of any month, it will be 4 months into 4. If you take 4, 1,947. See, 1,947 rupees is the interest, 1,947. Okay, right. So like this it is calculated. And here, in this case, Sunday creditor, Sunday creditor, for example, in the Sunday creditor, see here, Sunday creditor, we have given 30 days. But even if you give the 30 days period, it is calculating interest. So 30 days means from April 1st, 30 days means 31, means 1st May will be the due date after April. From after 1st May, that is the 1st May is the due date. So if it is not paid, delayed, from 1st May, that is the due date, it is not paid. From the due date, it will calculate the interest. So previously for April, it will not calculate. After the due date only, it will calculate. But here, it is not taking. Here, it is not taking like that. What is happening? Here, statement of interest, interest calculation, interest payable. So it is taking 1st April to 1st August, whatever it may be. See here, how it is calculating? How it is calculating? From 2nd April only. So it is the number of days, credit days, it is not taking. We did not tell it. So take after the due date. We are not that tell. We are not given the instructions. We have to give the configuration. After the due date, from the due date, past and in the advanced configurations only that is available. So in that case, after the due date only it will calculate. But here, it will, simple calculation, simple configuration, it will calculate from the bill, date of the bill. Okay. Now we will go to credit. Same thing here. We need not go. So for debtor means creditor. For creditor means interest receivable you will take up. Interest receivable. So 1st April to, for this also, 1st April to 1st July you will take. 1st April to 1st July. See here, 1st April to 1st July, not 1st July, will take up. 1st April to 3rd July. For example, 1st April to 3rd July you have taken. So 3rd it will not take, 2nd July. So 1st April to 2nd July we have taken. So here, current assets, that is we have to receive the interest. So from debtors we have to receive. Enter. So sundry debtors, what are the names, different, all the names will come. And here for each one, we selected this pair name. And there are many more. So each one you select for the calculation of that person only, it will show for different bills. Here there is only one bill, interest. Second, another bill, interest, another bill. If there are many bills, go to Alt F1. Otherwise, just enter this. I am going Alt F5 or F1. It is showing, you see. So here, so the bill date is 2nd August, 2nd April. So bill date is, So bill date is 2nd April. In the case of this one, bill date is 2nd April. It will take from the next day. It will take from the next day. And here, so here I will give another one. So here, 1st April to 2nd July will be exact in a month. That is the 3rd onward. What we do is 3rd to 2nd. I will do one thing. No. Here the date, because other dates it will not take. What we do is for this transaction. So here, so not first one we give 1st April. For this we will give 2nd April. 2nd April. 2nd April will give because 3rd April should not take. So accept, accept. For this no days is given. Accept, accept, and here no number of days given. Here 30 days given for this also. Debtor. Okay. So for this also 30 days given. Okay. Okay. No problem. Okay. So here we can give. Okay. Now if you take this, enter. Sorry. Now go to interest calculation. Display more reports, statement of accounts, interest calculation. Now debtor means interest receivable. Interest receivable from 1st April to 2nd July. We will give 1st April to 2nd July. What is their calculation? Enter, enter. So now Alt F1 or enter. See, 3rd April is taking. When we are given 1st April, date is not changed. So here in the case of day book, 2nd April I had given for the sales. 2nd April. We have given the 2nd April. Okay. From 2nd April. Okay. 2nd April we have given correct. So for the 1st April to it will take from 2nd, 1st June or 1st July. But in the case 2nd means it will take from the 3rd. So 3rd means 2nd of any month. Okay. Right. Now it will take. Now display more reports, statement of inventory, statement of accounts, this inventory calculation, interest receivable. Interest receivable 1st April to for example, 1st April to 1st July we are taking. 1st April to 1st July. So enter, 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 enter. See here. Here we have taken 2%. So it is, see, the bill date is the 2nd April. 2nd April is the bill date. So it is taking from 3rd. So from 3rd means 2nd of any month. 2nd of any month, isn't it? So here 2nd of any month means from 3rd April means next May 2nd month means May 2nd will be 1 month. May 2nd, June 2nd, July 2nd will be the date. But we are calculating 1 day before that. 1 day before means the amount will be less. Okay. Now how it is calculating? You see here amount is 8,260. 8,260 into percentage is 2%. Into percentage, this is per month. This is per month. Okay. Into how many months it will take? Generally 3rd April to 2nd May, June, July. 2nd July. That means 3 months. Into 3 months it will take. It will be 495, 60 paisa generally. But when you are making the calculation, 1st July. So the actually 1 month will be July 2nd will be 1 month. 3rd April to the 3 months means 3rd April to 2nd July. April 3rd means 2nd May, 2nd June, 2nd July. That is 1 day before that. That is we have to reduce 1 day interest, isn't it? How it will be reduced? This is 495, 60. How it will reduce? So amount is 8,260 into 2%. Okay, this is per month divided by, so in the month of July, 1 day less. That is for that month. So divided by how many days? 31 days. So per day is, it is 5.329 means 5.33. 5.33 is to be reduced. It will be reduced. So it will take up to 1 only. That means 1 day less in that date. So 5.33. Remember 5.33, 8,260 into 2%, 2% into, we are taking April, May, June, July. Okay. Take 4 months we are taking, not 4 months, it is only 3 months. Okay. 8,260 into 2% into 3 months, April, May, June. Into 3 months we are taking 495.60 minus 1 day before that. What is the amount we got? 5 something we got. For example, 5.50, 490.1. Actually 0.01 it will get. So it is, the interest is 8,260 into 2%, 2% into 3 months, 3 months, April, May, June. So into 3 months. So 495.60, 495.60, 495.60 into 2%. This is the thing. divided by 31 days in July. 495.60 minus 5.33. 495.60 minus 5.33. So the amount will be, so there is something reduced, something calculation is wrong for us. So it is 3rd April to 2nd July. One day before that, one day we had to reduce. So 5,260 into 2% into 2% divided by 31 days for July. July 2nd means 31 days in July month, 31 days. So 31 days you have to get 5.33, 5.33, 5.33 into 2% general interest into 3 months. So 5.33 had take 5.33. It will be 490.27. It is 9 we are getting, but actually it is, we'll get it correctly. But something, whatever it is taking, the calculation will be correct. We would do some mistakes. So here we do some mistake. In this case, 8,260, 8,260 or 250, 261, 8,260 into 2% into 2% into 2% divided by 31 days for July. 31 days means 5.33. 5.33. So 8,260 into 2% into April, May, June into 3 months minus 5.33. So it is getting 490.7. I will check up something. We did some error. Calculation is error. Calculation is error. If you take for both amount, if you take total amount, if you take what is getting, we are getting 8,260 into 2% into 3 months, we are getting 495.60 and we are getting 5.33. That means we are getting 2.61. So we have to get 5 minus 5.51. So minus 5.51. It will be 490.09. So that I'll check up that. So like this, but the calculation will be perfect. No error in that. So the calculation which we made, just we are showing the calculation, will be wrong. So like this, we calculate. So this is how we calculate the interest. And what to do when you are paying? So for the debt, for the credit, for the debtor or creditor, what we do? We are calculating interest for the debtor and calculate. So the interest is calculated. So till that amount, what we have to do next? At that time, that interest amount is to be transferred to the account. So debtor account, interest to receivable, for creditor account, interest paid which is shown there, that is to be transferred. So till you transfer that, whenever you want to make the entry, that is the calculation from date to what is the calculation period, it will show, the calculation will be shown. Once that amount is transferred, for that period calculation will not be shown. So that amount is calculated and transferred, it is transferred to ledger account. That means such a case, after that it can calculate that the amount is paid. If the amount is not paid, for that principal amount only, it will calculate interest again. Continue. If you take after that period, the amount is paid means the total amount will be paid. So for transferring, what to do? What I said, voucher we can do transfer, or we can do, voucher means manual entry you have to make, interest manual entry. In the case of debit note, credit note, automatically it will show the interest also. So that transferring, and if you transfer that, calculation is similar, same for compound interest also, but every period, every month or every quarter, we calculate like this, immediately we transfer. This is transferred at the end. At only one you calculate at the after some time. So that will be transferred. But here for every period it will be transferred. So yes, this we will take up. This error I will show you in the next I will say in the next video I will show you the what is the error we made. Okay, right. So you have any doubts, means if you have any doubts, you can post your comment, as also your idea about this video, you can post it. So all the best. Thank you. We'll meet in the next video.